Good morning, and thanks for joining us here on Treasure Coast Solutions. Every Wednesday, we talk about some of the things that may impact you in your daily lives, some of the things that could have an impact on you in the future, maybe on your business or on some of the things that you've got going on. So uh, it's I'm here for you to help if I can, just to provide some information and kind of to give you some opportunity to just think about some things that are going on. It's more of an economics based program. We do talk a little bit about the political side of things, but only as it relates to the economics and some of the political decisions that may impact the uh, the result, or more often than not doesn't impact the result, but they think it will. So we've been talking about a number of different things, and we'll and I'm going to keep with the agenda, so to speak. But I do have a couple issues that I wanted to talk about. My name is Mark Brackbill. I'm a CPA, so I do a lot of consulting work and a lot of tax work and audit work, those kind of things. So I have an opportunity to kind of see some of this stuff in action, which is nice. But I there's a couple things I just wanted to let some of you know, or some of the business people know, some of the individuals know. We don't. It's not a financial planning show, like I say, but I do like to give some information that may help you with your business from time to time, or your individual things that are going on. Um, the uh, I want to talk about a little bit about that. Also, give you a phone number in case you have a question or comment. 220-9788. 220-WSTU is the number in the studio here. Again, that's 220-9788. That's the number, and you can call. And it's the number for all of the shows here, and many of them have call-ins and things like that you can do. So write the number down. It's always good to use. And I know a lot of people on our Monday show on condos, they call before we give the number, so they've got that number down and they get right in the queue. So if you have anything, it's a good number to call. And Evan's here, and he can answer some of your questions and get you some information a lot of times on any of the shows, including his own in the morning. So they have lots of good stuff there. Um, what I was going to talk about or mention just as briefly is there's a couple things going on, and probably I'm going to bring some guests in, some friends of mine and fellow CPAs, to talk about what's going on with the Internal Revenue Service. Uh, we have a disaster, really. I mean, there's no other way to explain it. It's just you hear about a lot of problems, uh, but if you've gotten to a point where the IRS can't collect the tax money because they can't process your tax return, and again, um, this is the boots on the ground. This is what's really happening in this world, in the tax world right now, and is that the the IRS has been claiming for a number of years now, but in particular the last couple years, that there is a huge number out there called the tax gap, and what that is the difference between what the IRS is collecting from the taxpayers and what they should be collecting from the taxpayers. Now, the should be is in their opinion. So they're basing it on their internal numbers. They're basing it on 1099s and things that they've got that they show people should have filed returns and they haven't, and they owe taxes and haven't paid, and all of those kind of things. And they call that the tax gap. And as a result of that number, they then have justified in this new budget reconciliation bill hiring 1,000 new auditors. And those people are not going to be people to process returns. They're auditors, people that are going to go out and audit you because you're not paying the correct amount of money. They're going to collect the tax gap. And statistically, they show that for every dollar they spend on an auditor, that auditor can collect $1.50. So they look at auditors as a profit center because it generates revenue that they don't normally get. And I would say historically, 10 years ago, that probably was somewhat true. Well, more like 20 years ago. And the reason I say 20 years ago instead of even 10 is that a large portion of the tax gap, this number that they think we owe, is based on statistical calculations that are generated by audits that are done of returns in the past. And they're not just the regular audit where you just somebody looks at your numbers or electronically looks at your numbers. These are very detailed audits that they do every 10 years. And they make you prove everything. You have to show receipts, documentation. You have to prove everything. Now, I've been through audits with clients. You do not normally have to do that. Most of the stuff, if they look at, because they don't have that kind of time. And let's, I guess I should backtrack and talk about what the IRS actually does from an audit standpoint and how it works. So the IRS has actually a couple different ways that they audit you. The way most taxpayers think of is the IRS calls you up, send you a letter. They don't call you up. They send you a letter and ask you to come in and bring your stuff, and that that you're going to be subject to an audit. It's called a desk audit or an office audit or whatever. And so they bring you in, you come in, that's for individuals, and you come into their office. There's one up in Port St. Lucie. You come into their office and you sit down with an agent who goes through all of your stuff and asks you for documentation, where did you report it, and all of those kind of things. Now, those almost never happen anymore. There isn't enough and hasn't been enough people to do those kind of audits for 15 years. So those hardly happen anymore. What happens instead is the other kind of audit, which is an electronic audit. So what happens is that you submit your tax return, and the IRS runs all of these statistical calculations against it, assigns it a score, and if it reaches a certain score, they kick it out, and then what's supposed to happen is an agent is supposed to look at that return and determine whether or not they made a mistake. Maybe the reason that the score is high in one area is because something's reported someplace else on the return, and it actually was reported, just wasn't reported maybe in the right spot, or wasn't reported where the IRS expected to see it. And so therefore they, they say, oh, okay, we see what we did. Well, there's no need to audit that. They haven't had anybody to do that in years. At least 10 years, probably longer. So now what happens is that your tax return goes in, they run this statistical calculation, and then if it comes out that you score a certain amount, they send you a letter saying that they're adjusting your return or auditing your return. It's considered an audit. So that's in their audit statistics, and that you have to provide documentation as to why they shouldn't change it. So it switches from they having an obligation to prove you wrong to you having to prove yourself right, which kind of is not necessarily in accordance with the way our judicial system normally works. But that's the way that it happens, and that's what they've done because they don't have the people, and they don't have time to look at these returns. So they send it out. Now, if the statistics that they used to determine which returns, they needed to look at because they scored outside these ranges, they had too much of a variation in the return, so they think that there's problems with it. and they decide they're going to audit it or send it to the local office for audit. Uh, the, the problem with that is that those statistics that they use to determine that score are based on these audits of a very small number of tax returns, but in very, very big detail. So, they may do um, less than 1,000. Maybe they try to do a certain, at least one in every industry. So, they may do, 1,000 to 1,500 of these things every 10 years. Um, and one congressperson referred to this one time. These audits, they are so brutal. I mean, they are time consuming. They take months, and they are, and it requires a lot of information by the taxpayer that they don't normally have. They have to go back and prove everything. They normally wouldn't have to do that, especially stuff that's past the statute of limitations and all that kind of thing. But they do in these audits because they're generating these statistics. So they want to know, where did somebody fudge? Where did they make the number up? So they audit these in detail. So a congressperson at one point referred to these audits as an autopsy without the benefit of death. That's how bad they are. It's a grueling process. So what happened is, the last time they really did one of these in any kind of great detail was over 20 years ago. They didn't, like I say, they do them every 10 years. So it was about 20 years ago. And so they decided to update them again when they were scheduled to do them 10 years ago. There was such amount of complaints by Congress and others that they severely limited it, and in fact didn't really do what they normally would do. So the statistics have gotten worse, and that's amazing, because the data has gotten better. Why has the data gotten better? Well, you remember when the IRS came to you and said, look, we want you to file your return electronically so that you could get your refund faster? Well, that wasn't the answer. That wasn't really what they were doing. That was the sleight of hand. That was the lie that the government tells you to get you to do what they want to do, like, here, take this vaccine. But it's just the lie that they tell you, because they don't want to give you the truth and let you make a decision. The actual reason they were doing that was not to get your refund back faster, although I think they thought that was going to happen. It really didn't, because of the fraud that was involved. Now it takes longer because of the amount of fraud that took place, because they were actually kicking you back a refund before they had the actual documentation to show that your return was correct. Now they put holds on it. But the real reason they did that was so that they would have more information about you. Because the funny thing is, when you file your tax return, the IRS doesn't keep it. I mean, they do, but it's in a warehouse someplace that they don't have access to. So let's say you mail in a tax return. They don't have that data. So what happens is, they take that tax return you mail in, and somebody manually enters that data into your file. And they don't scan it in, because they don't have any way to extract it all. They don't have that sophistication yet. So what they're doing, in effect, is putting in key data, and but they can't put in all the data. So that means that a lot of the tests they run can't be as accurate, because they don't have all of the data. They don't have all of your numbers and all of the sub numbers to be able to say, oh, okay, here's what this is, and here's where it is, and this number's way too large for, maybe your administrative expenses are good in total, but in there you've got a fee for office supplies that's 60% of your general administrative expenses. That's a little bit of a red flag for them. But they don't know that if they're just putting in your administrative expenses, if they're not putting in the detail. And in the old days, they were not putting in all of that. In fact, they wouldn't tell us what they were putting in, but they were not putting all of it in. But once they convinced you to file electronically, and then forced you to file electronically, that's ultimately what happened. When they couldn't convince you, does this sound familiar? When they couldn't convince you, they mandated it. They forced you. You now have to file electronically, or you have to submit a statement with your return saying, well, I'll cut through all of the detailed language. It basically says, "Come audit me," because I'm not providing my return electronically. Therefore, I must be cheating, and so go ahead and send me this notice telling me that, telling the IRS that, so we can come and identify your return and look into you personally because you are a problem. But anyway, and that's the history behind why we file electronically now. By the way, CPAs tried to stop that, uh, not because we're altruistic, but because first of all, we knew most of our clients didn't get any benefit at all from getting a refund back faster because it was all being applied to next year's taxes. So none of our clients cared about that from a cash flow standpoint. That wasn't getting them any money quicker. And we knew that they were going to use the numbers to do more audit work on our clients, and it meant more of our clients would be audited, and potentially because of the problem with the system that they use on these audits, to get the data to determine the audits, we knew that we would have a lot of clients that would be audited unfairly, no need to audit them, and they would have to incur a lot of cost to have us do that, to support them. Because even if your tax return is right, there are items on there that are subject to interpretation. And if you don't have somebody explaining that to the IRS, they will come up with their own answer. And it's not usually in your favor. So it's important to understand that and see how that whole system works. So that's what's happened. We fought that. We lost. I think I told this story before. It's kind of, but it's something that as a taxpayer you can probably relate to. As a CPA, if I knowingly prepare your return incorrectly, or I know you've falsified numbers, or I know you don't have support for a number maybe, and are fudging it, making it, whatever. If it turns out that you have committed fraud, haven't paid your taxes correctly, I lose my license. I have a big penalty that I have to pay, and then I lose my license to practice, so I'm out of business. Now, interestingly enough, that doesn't affect non-CPAs, enrolled agents. If you're just a tax preparer and you're getting paid a fee and you're not licensed to practice before the IRS, they can't remove your license. So they can't do anything to you if you're a paid preparer who is not a licensed paid preparer. So if you go to somebody who is a buddy and they're doing your return for $100, they can't be penalized. You, of course, still can go to jail, but they will not be penalized. Also, you will not be able to use the excuse that I relied on my CPA or my paid professional. They don't accept that if that person's not licensed to practice. So I risk losing my license if I offer information or do things that are, incorrect. That's a risk that I take. But so what happened to get what the IRS did is a number of years ago. It's been probably 10 now, maybe a little less than that. The CPAs were not voluntarily filing electronic returns, and in fact, nobody was filing electronically in general. So they tried to get us to encourage our clients to do that. And first, it was voluntary, and then on our part, and then they now have changed some laws. But what happened back originally is we wouldn't voluntarily do it. So the government went to H&R Block, and they told H&R Block, "Here's the deal." That's my Biden comment. "Here's the deal. We will if you will file 90% of your returns electronically, we will not assess a paid preparer penalty against you if it turns out that return is wrong, or that your client took deductions that they weren't allowed to take, that we subsequently come in and throw out, as and those are kind of called abusive transactions, or transactions that basically the IRS has determined already that that they don't agree with that. Now, doesn't mean that you necessarily have lost in court, but it does mean that the IRS needs it to be reported to them because it's a position that you're taking that they've found to be wrong. So that's a big plus because a CPA can't do that. If we do that, we lose our license. So so anyway, what happened with this is that it turns out, so they went to the H&R Block. Now, some of you can remember this if you were preparing tax returns back then. H&R Block ran a commercial that was saying, we can get more than your CPA. We can get a bigger deduction than your CPA, or we get a bigger, we can take something to the effect that we can take deductions that your CPA can't even take or won't get you. And they were right, because they weren't going to go to jail. They weren't going to get fined. And the IRS gave them 3 years, actually gave them 3 years of that protection. And many CPAs really didn't understand why that happened and were upset by that. But like I said, it turned out that was a deal that was cut at the higher levels to get returns filed electronically. Now, what happens is the IRS finally, when they got enough returns done electronically, then they could start mandating it. So, everybody else is doing it. You got to do it. And of course, then not as many people are complaining because a lot of people were filing electronically and were getting a refund back. In fact, some CPAs started filing electronically. And so, because it definitely is easier from our standpoint to file an electronic return. We don't have to get the tax return out to the client. They don't have to mail it. We don't have to tell them how to mail it. We don't have to mail it ourselves. So it's very advantageous sometimes from an ease of practice and costs. It's less costly, but we knew it wasn't really good for the client. Now we have no choice. The government came out and said that originally they came out and said, if you prepare more than 100 tax returns, you have to file them electronically. And if you don't, your client, you have to have in your file a form from your client indicating that they instructed you not to file electronically. So that was the way they did it for about a year, and then they reduced it to anybody who files 10 tax returns or more has to file electronically. And then they changed it from the form you had to keep a form saying your client had said that they didn't want to file electronically, to you had to submit a form with your tax return saying that your client has refused to file the return electronically. And therefore you're off the hook, but they're not. So that's the come audit me form. So that's what's happened. That's kind of the thing that's where we're at with the IRS from how their system works internally. So now they've got all of these returns filed electronically. They're geared up to file them electronically, not by paper. And yet still people send their paper returns in. Furthermore, they get all this data in and then they have to match it up. So it's not as easy as, boom, your return goes in and now it's in your file someplace and they have it. It's not the way it works. Actually, that return, when it's filed electronically, is screened for accuracy. Does it tie out to, is it the correct Social Security numbers? Are the forms that are required there? Are all of those things there? First, they check all of that stuff before you're allowed to file. So it gets rejected upon filing if basic things like Social Security numbers and things are wrong. All right. Or interestingly enough, if you've already filed a return. Now you say, why would you get one if somebody has stolen your identity and they've filed a return under your Social Security number already, that's a clue. So when you get a notification that a return has already been filed, it's a problem. You may have identity theft at that point. So that's what happens. So that's how the process works. This data then goes through this, and once it gets past the point that it's all clerically correct, and this is why so let's just bounce back and say, I've had clients, or not clients, but other taxpayers who are clients of other people say, well, why should I use a CPA or an enrolled agent? Why should I use a CPA when if I use my friend Joe, the return gets accepted just like yours. The IRS says it's okay, just like yours. So why should I pay more? Well, no, the IRS does not say it's okay. All the IRS says is that we'll accept this return for filing because it's clerically accurate, not correct. In other words, you got the right tax ID number. You didn't leave off forms that you're supposed to file, that kind of thing. They also will they will determine whether it's timely filed and all that kind of stuff. So that's where that goes. But now what happens is that return isn't correct. They don't say, yes, this is correct, now you're good, same as the other CPA return. It's not what happens. What actually happens, this is where the rubber hits the road, so to speak. That what then happens is that they run it through a check against information for your file. So they go ahead and determine, for example, if your 1099s that you got match up, if you're if you've paid, I know one that hit one of my clients, which I hadn't even thought of is the client had gotten money from under the Obama administration. There was an amount that was paid. Most people remember it as $9,000 non-refundable to buy a house, your first-time home buyer credit of $9,000. So as long as the house was equal to, I think it was, I forget how much it was at the time. It had to be like 70,000 or 100,000 or something. You got this $9,000 credit. And then as long as you didn't sell that house within a short period of time, you didn't have to pay that credit back. But people forget that before that, the year before that, it was a $7,000 credit, and you had to pay it back no matter what. And you had to start paying it back at some point down the road. It wasn't right away. And you had to pay it back if you sold the house. And so I had a client this year that sold a house, and it was one of those houses that had the $7,000 credit. And the IRS sent a notice out, said, you owe us money, and you need to fill out this form and send it in. And so what happens is, like I said, that's at the point we're actually into the IRS at this point, but we're not into your file yet. And it's at that point where your tax return is being looked at, and they may kick back a notice. And so they don't say this is the tax. They may kick back a notice and say, this return's not complete. You need to send us more information. You need to add this to your return. Now, that can take months for them to do that. It doesn't happen immediately. It can take months. So now what's happening is you've paid your taxes. You may have electronically paid your taxes, and your payment is in the account, but your tax return is not. In the old days, the IRS was supposed to know that was the case. But today, with COVID, nothing's being processed. And it hasn't been processed for a long time. I think this year there are 35 million tax documents that have not been processed. That includes electronic filing. 35 million. So that's a lot. So now if somebody pulls your transcripts, let's say, for example, you are going to get a mortgage loan, and the mortgage people want to pull your transcripts. They're really probably not pulling your transcripts because that takes a while and they can't get it easy. But what they can find out is if there's transcripts there. And so what happens is it comes back saying you don't have any transcripts, you haven't filed your return. But you have filed your return. You filed it electronically. You've got a receipt showing it's been accepted. But what's happened is the IRS has not put that in your account yet. So as far as the IRS is concerned, you haven't filed a return. So then they send you a notice. You haven't filed a return. And you get a penalty for not filing a return. And then you can't call them because you can't call the IRS right now. You can get through to them, but they don't have access to computers. So if it's anything they have to look up, like everything, then it's a waste of time. You can't get anything. So you do have to wait. This is what we're going to talk about at some point later. You have to wait until your account has been turned over to collections. Now that's far into the process. That is a scary thing for all of us, including me as your CPA, because at that point, I'm going to be past my first appeals area where I can go back and say, no, you're wrong. We are allowed to deduct this. This is your mistake, not my mistake. I've given that up already because we've gone to collections. So what's happened is I haven't responded to the first notices, but I can't respond to the first notice because there's nothing I can do. I can send in a letter on those, but they have 14 million pieces of unopened mail from last year. So let alone the 35 million pieces of mail, or not mail, but 35 million documents that haven't been filed this year. So it is taking right now somewhere in the range of 8 to 10 months for the IRS to process paper. So if, for example, you send in your tax return April 15th with a check for your taxes due, and you decided to send that by mail instead of electronically filing it, there's a real good chance you're going to get a notice saying you haven't filed your return or you haven't paid your taxes, because it's taking them that long to get to these things. And in the meantime, they're sending you nasty letters saying, we're going to lien your account. We're going to levy your account. You're going to go to jail, basically. They don't say that, but they're saying we're going to lien, we're going to levy. You need to contact us in 20 days or, we're going to take action. But you can't do that because you call the IRS. And normally what would happen is you'd call the IRS and they could put you on hold. They can't do that. They don't have access to your file. So, and you can't get through to them. It's hours and hours and hours. And if you do get through to them, they may be able to answer a question, but you've got at least a 50-50 chance that answer is incorrect and you can't rely on it. So, and it's significant. It's a huge, huge problem. I'll give you an example, my own personal experience. I'll give you an example of what happens. And other CPAs are having the same kind of problem, but this just was. So my 2017 tax return got filed on a timely basis. But in the connection with that, I had what's called an estimated payment penalty. It means that I didn't pay my estimated taxes on time, which is not a problem. That's just in effect, they charge you a small fee, interest rate, for the period of time that you were underpaid. In my case, I had figured that in at about 50. I think I figured it was about $53, and it turned out it was $32 or $23 or something like that. And so they sent me a letter saying they'd recalculated that penalty and they were going to refund me my $23, whatever that number was. So I said, okay, I didn't have to do anything. So lo and behold, about 6 weeks later, I got a check for $30,023. $30,023. Well, I immediately knew what the problem was. They refunded me my overpayment on the 2017 tax return that was applied to my 2018 estimated payments. So I had money left over. I'd overpay, which I usually do. I've overpaid my taxes so that I had a credit going towards my 2018 taxes, because that way I'm paying it up front and I don't have to make the estimated payments. So anyway, so I had applied this pay. So now this payment doesn't get applied, but now I've got a check for $30,000. So the first thing a taxpayer would normally say is, well, all right, so what do I do now? Do I keep this? Well, no, because if you keep that, then you're going to have underpaid your 2018 tax return because this tax didn't get applied, and now you're underpaid by $30,000, and you're going to owe penalties and interest, and it's real penalties and real interest. It's big numbers at that point. So I knew that I had to send that check back. You can't. And here's the other thing. So a lot of people would say, okay, well, I'll just cash the check and I'll write the government a check back. All right. If you do that, it's treated as if you had that money all along, didn't apply it to your taxes when you were supposed to, and you were underpaid. You didn't pay your payment on time, April 15th. So you owe late payment penalties. It's a substantial number. You owe substantial underpayment penalties. Bottom line is you're going to have a lot of penalties. In my case, $15,000 worth of penalties. How do I know that? Because after they sent me the check back by mistake, they send me a notice for my 2018 tax return saying, by the way, your 2018 tax return was, you didn't pay the correct amount of taxes. You didn't, and you owe us $45,000, the $30,000 that didn't get applied, plus $15,000 in penalties and interest, right? So I know that's a mistake on their part, and I know because I'm a tax preparer, a professional, that all I have to do is send that check back and tell them to apply it. I cannot cash it. If I cash it, they will treat it as if I owed the penalty and didn't pay and didn't have it applied. So what you have to do is you have to send it back to the government, and then they will void the check and apply it to your next year. The thing is, it took me about 2 weeks to get a hold of anybody at the IRS to ask them, where do I write void? Because I knew you had to write it in a specific place. And normally when I void a check for business purpose, I tell my clients, write it across the front of the check, tear off the signature line, and that's how you void a check. That's not how you void a check with the IRS, by the way. So what happened instead, because what happens is if you do it that way, the IRS will issue a replacement check. and then it doesn't accomplish what you need to accomplish. So I finally got a hold of somebody at the IRS. No offense, young person. So I knew that they were relatively new, probably. And I said, what do I do? And they said, well, just cash it and write a check back to the IRS. Well, I knew that wasn't the answer. So I said, can I talk to someone else? Because that's not the answer. So they got me somebody else. And that person said, well, you just cash the check and send it back to us. And I said to him, you understand if I do that, right, that they're going to charge me penalties and interest because they're going to treat it as if I had that money all along. And he said, oh, yeah, that's right. Well, yeah. I said, I need to write void on the check, but I don't know where. Can you find out from somebody? So they asked a supervisor. Now, to me, this isn't a supervisor question, but they asked a supervisor. And they got the person, and their first response was cash the check. Well, but then they said, oh, no, this person said, no, you've got to write void on the endorsement area on the back of the check. And that's all, not all the way on the back, just in the endorsement area. Just write the word void. Don't write it on the front of the check. Don't do anything else with it. Then they said, you need to mail it back in along with a letter just explaining what happened. And I said, okay. So now I mailed a letter in. Keep in mind, I've got a letter from the IRS saying that I owe $45,000 for my 2018 return, and I don't owe anything. And they're threatening to levy and lien all my bank accounts. I send the check in. I sent it in, certified mail, return receipt requested, overnight, right? So about three months later, I got the green card back. In other words, they finally opened it. I'm getting these dunning letters from the IRS at the time. And then about I guess it was another 4 months, I got a notice that they had fixed it. All right. Got a notice that they had fixed it. They had applied the refund. Now, in the meantime, it kept me from filing my 2019 tax return because I had an overpayment on the 2018 tax return that was going to be applied to 2019. And so I had that overpayment, but until they processed the 2018 return correctly with the 2017 refund, it didn't show that. So if I filed my 2018 tax return, I would get a notice right away that that my estimated payments were wrong. So as a result, I'm late on my 2019 tax return, although I'm not going to owe any penalties because I don't owe any tax. So when it's all cleared up. So finally, I was able to file my 2019 return. Keep in mind the 2019 tax return is what the SBA is using as a baseline for us, and they don't have mine because mine didn't get processed on time. It's getting processed late because of these penalties that the IRS, because of this improper way that the IRS applied the payment. So here's where I'm at. So finally, I got a notice that this is all taken care of. That we've refunded it, applied it to 2018, so I could file my 2019. I got all of that. It took about 10 months, right? And so then I thought it's all taken care of. And about what was it? About a month ago, maybe a little longer, I get a notice from the IRS out of their tax preparer compliance department. And it's a letter that says, you have not filed your 2019 tax return, and you filed your 2018 tax return, and you owe substantial tax without doing an installment agreement. Therefore, you're in violation of your requirements as a tax preparer, as a licensed tax preparer for the IRS, and we're going to remove your electronic filing number. So I'm going to lose my ability to practice because they screwed up. And there is no way to fix it. You can't call anybody. You can't talk to anybody. You can't get a hold of anybody. You just got to hope that it works through the system before the bad stuff that they're threatening actually happens. Now, the good thing is, up to about this point, the government knows that they've got a problem. So they're sending these letters out because these letters are generated automatically. You're saying, why don't they stop? The letters are generated automatically. That's what happens. And in fact, they're actually generated about 10 to 15 days before they actually get mailed. So that's why a lot of times you'll get these letters and they'll actually be dated the day after you get it. Because they send it out, they do print them out about 2 weeks in advance, and they send it to a mail service, an external contractor who actually mails the documents out. So, a lot of times you're getting these letters, dated after you've actually received them. But so they're still rolling all these letters out, but at least the IRS wasn't processing these things through. They are doing that now. So, because first of all, they think that I don't know what they think. Do they think they've caught up? I know they haven't caught up. They don't have anybody in the office. Here's the problem. There's a 3-year statute of limitations on this stuff. So unless they can prove fraud. So we've had almost 1.5 years now where nothing can get done. So if you've got 2017 or 2018 returns that were being handled in 2019 and still were, because a lot of times it may take a year to get a thing handled. So you've got stuff that was processed and it's going to be running up on the statute of limitations because they have to leave you 90 days to appeal. And so they have to, a year before the statute of limitations is up, they have to complete their legal action or start at least be at a point that they can complete their legal action so that you have a chance to appeal. So now they're doing this, they're doing all of this stuff and sending all of this in. And they're doing this without, because they're running up on the statute of limitations, but they're actually sending stuff out on things that are wrong. So it's a mess. And until the IRS, you don't want the IRS to be able to access your file from home. Think about that. That would be the identity theft nightmare. You think somebody could make a major mistake. The major mistake would be allowing people to access the government tax files from home, because you would have the ability, without protection, you'd have the ability to access it. Somebody would be able to get into anybody's file and steal all kinds of sensitive data, creating all kinds of new identities. So it's a really nasty thing. And so that's what's happening out there. It's a big problem. So I wanted you to be aware of it. So when somebody tells you, when your tax preparer, uh, especially if you're talking to a CPA or whatever, and they tell you, look, here's where I'm at. I can't do anything, but we didn't do anything wrong. Here's our documentation, but we can't get a hold of anybody to fix it. They're not lying to you. They didn't screw up. This is a case where, you got to blame the IRS first. Not the common thing is, well, the government can't be wrong. The government is wrong in this case. And you've got to realize it. And they know they're wrong, but there's nothing they can do about it. Now they're hiring 1,000 people, but they're going to put those 1,000 people in auditing you, not catching up your file. They could they could actually collect, and I use that in quotes, billions and maybe $1 trillion if they would just get the stuff processed, so they would actually figure out who's filed what and where they are and how much money is actually owed. Right now, the government has no clue as to how much you've paid, how much you owe, and where you owe it for and what period. It is a disaster, and it is not something that's going to go away. It's going to get worse. It could cause the collapse of the system, because if you can't collect taxes, how does the government pay its debt? You have to, at some point, collect this money, and they don't have any record of that. You can't go audit them. You're going to spend more money to audit people, and all they're going to tell you is, here's my paperwork. I filed. And then the auditor's going to go back and say, well, I'm signing off on this audit. They might be able to process the paperwork at that point. So anyway, that's kind of where, if you think about it now and look at it from an economic standpoint, you have a crisis when the government can't collect the money that they need to pay this deficit that they've just run up into the trillions of dollars. That's the problem we're facing going forward. It's not the economy, it's the money that's already out there. You may have raised the taxes, but if you can't collect it, it doesn't do you any good. Still increases the national debt. Anyway, we'll talk a little bit more about this in the future. I appreciate you joining me here on Wednesday so we can talk about some of these issues. And I'll be back next Wednesday right here on WSTU at 9 o'clock. WSTU Digital 1450, Martin County's Heritage Station.
Tap your microphone, please. Got it.
the strength of Martin Health.